Well, despite blowout earnings and a 24% rally just over the last month, retail traders have been dumping shares of Nvidia. Vanda Research shows traders sold more than they bought over the last week, that you can see on your left-hand side, as well as on the last 21 trading days. There's also a NASDAQ sentiment chart, which also confirms this same pattern, which is pretty much net selling for the latest 10-day average. You can see just really on the right side of your screen, it's the sharpest drop in just the last 3 years. And only just yesterday, when Nvidia became the most valuable company in the world, did retail swing back to buying Nvidia, although only a mere $35 million for the day, according to Vanda Research. So the split is really just stark. Retail investors who rode the 2022-2023 hyper-growth wave are now bailing on the stock. Dan Ives from Wedbush told me that retail is just more worried about China drama and the export restrictions, while analyst Ben Baharin notes traders are frustrated by fading spike returns as Nvidia's business matures. They, were looking for that quick buck and now not getting those gains. Meanwhile, institutional investors who reduced tech exposure during April's sell-off, you can see the dip on your screen there, are now forced to buy back in as the rally continues, taking the opposite side of retail investors over the last little while. Mizuho's Jordan Klein calls Nvidia's second half, though, the setup's fantastic, and that's why investors on the institutional side are getting in. The divergence, though, signals a market evolution as Nvidia transitions from hyper-growth to steady growth, with much AI upside already somewhat priced in. Some can debate that. Institutional capital increasingly drives today's price discovery. Retail selling streak may now serve as more of a contrarian indicator for institutional buying opportunities rather than the bearish signals that we're so used to seeing for stock performance.